today's video, I'll try to explore what is happening below the surface as far as the Nifty is concerned. The Nifty's been, appearing to gain strength, but actually it's been very, very lethargic. We've seen a complete loss of volume in the Nifty futures in this rally. But all that is because of the lack of participation from the broad market. Now, when we say broad market, most people are only reading into it as the mid and small cap index. So I'm going to really highlight the kind of rotational divergences we've seen between various sectors and the Nifty. And I'm starting out here with the power index, which you can actually see on the screen. What you're seeing here is the power index has been one of the strong sectors of this bull run. And when the market really peaked in April with the metals and various sectors rolling over, it should have looked like this rally was done. So actually it broke the rising channel for the power index and actually took that kind of a view that maybe we were done over there, but that didn't really happen. So this channel broke. But what you really notice is as the power index made new highs, the Nifty was actually making lower lows. So you had an initial intermarket divergence, which resulted in a bearish setup and a sell-off. But what has followed is nothing different because here the Nifty has tried to make an advance. It's not gone back to an all-time high, but the power index did. And more recently, as we surpassed the September top in the month of October, November, we are actually seeing a lower top in the power index. That's also resulting in my own proprietary RMI indicator going into sell. In fact, it went into sell in late September itself and has been that way. So this is very divergent from what you see in Nifty, the Nifty and this weekly. So the Nifty weekly is not yet done that, it is whipsawing, but the power index, the BSE power is what I'm using over here, has already done that, and we can see that in various different charts and different counts. So even if we switch on, let us move to the next possible index. Let's say capital goods, that's been the other hot index of the recent period, done something similar. The peaking is slightly different because here what you actually end up seeing is that the capital goods index kept on going up till the Jan top over here, and then it actually fell with the market. Now at this point of time, the Nifty was making a lower high, so it looks like an intermarket divergence, and you did get a nice correction. But subsequent to that, the capital goods index has continued to make a higher high. Okay, and while it has done that, the Nifty did not. It's just back at the same level. And even now, as we haven't seen a new all-time high in the Nifty, we are seeing a slightly higher with September, but we haven't surpassed that. In fact, it's almost there. It's like neck to neck touch point over here, but not surpassed. And so again, a slightly divergent setup is what we are seeing, and what I'm trying to judge over here, are these divergences bullish or bearish? Are they really rotational distribution? Are they really signs of an ongoing strong trend? Now, because you've broken out of previous triangular structure here, which can sometimes be indicative of a fourth wave, and some people have argued with me whether we should take the current market structure as a fourth. And if you do, which is completely fair to say that this is a third and this is a fourth, if you are doing something like that, then what you also will need to think about is this subdividing? So either the fifth is done here, or are we going to do 1, 2 and 3 ongoing? But this most recent rally is very, very counter trend in nature, and therefore it appears corrective so far, not giving a clear sign that this could be a third or fifth extending. And if the fifth is ending, then are we done here? And the intermarket divergence with the Nifty is sort of signaling something like that. So that is what I'm watching out for. In fact, even Bank Nifty has managed to finally surpass to a new high, an all-time high, something that the Nifty itself has not really done. In some cases, like we're looking at the energy index, we're seeing a slow potential rollover happening over here. So the energy index made a lower top here, and then it's made another lower top. What it's doing in the second lower top is not confirming the higher high that the Nifty itself is trying to make at this point of time. So the way I try to think about it is that some of these sectors have either peaked in Jan or April and have really not made a new high. For example, the IT was the most glaring one. So if we move to the IT index, it peaked in January Okay. And at that point of time, it did make what we call as a new high compared to the Nifty, so a divergence. But that intermarket divergence resulted in a much deeper cut in the IT index compared to the market itself. But that was not true for many other sectors. Most of them, which have consolidated during this phase, are actually now making new highs at this point of time, which is essentially in the capital goods, power, and those sectors, but not in IT, not in metals, and not in the commodities related sector, which peaked in April. So those are still making lower lows over here, and that is the big variation. And we're actually seeing that further variation. The most important one is the most recent rally, right? This is where the FOMO is really dying and not getting rewarded, because everybody who's bought into the September peak, you're looking at a new high in the Nifty, but you're really not getting a new high in many of these sector indices as of this point. So it's not only the mid and small cap; those are of course important, but many other sectors which are showing this, this kind of pattern. Not all, but many. Okay, so for example, if I go to autos, that's been one of the hot sectors. Yes, it has made a higher high this month along with the Nifty, and has in fact been one of the outperforming sectors if I take the whole structure, because up till I think here in January, it was making a lower low with the Nifty. It did fall into March, but since March, it has been making higher bottoms and turning much higher. Okay. In fact, here when we made lower bottoms in the Nifty, we did not make lower bottoms in the auto index, and that sort of gave away the outperformance, and that outperformance has continued till now. And only now we actually seeing some kind of a pullback here, which is a little more than what the Nifty is doing. And so, does that really mean that the upside momentum has ended? We can actually check. For example, if I look at now, and here I'm looking at BSE indices, the weekly is in sell for the auto index as well since I think late September. So this has been the divergence, I think, where you see various RMIs going into sell. Even on the weekly chart, for some of the sectors that were outperforming earlier are actually giving contrary signals. And are those corrections really done right now is questionable. And with that, I come back to the most important one, which is the mid and small cap. The mid cap index has managed to have a pretty good rally compared to, the small cap index, in the sense retracing almost 80% of what it lost in this period. But in the most recent run up, and this is where our problem is, that between September and October, we are not seeing a new high. And in fact, they're falling off a cliff. So we are seeing the mid and small cap indices fall. Not as sharply as we did probably in the January and April occasions yet, but slowly sliding down. And the thing to really watch out for is, can they hold some kind of support and head higher? Otherwise, these divergences and the decline in these indices are lead indications of a coming decline in the Nifty itself. So that is what we are really trying to watch out for. We can even watch very, very short term. I think you can draw a trend line of the lows. The mid cap index is just sitting on top of it, trying to break that. It breaks that, it will mean that this entire advance that you saw inside the rising channel ended in 3 waves. So these 3 waves are A, B, and C. And after that, you're actually starting a major leg down. So this breakdown point is going to be important to watch for the mid cap index, to see that there's going to be continuation on the downside. The small cap index doesn't have a similar pattern, slightly different pattern. The pattern we see here is more like an ending structure inside this recent rise from which we have started to break down. I can't draw a parallel channel, but we do have a similar divergence, which is a lower high in the small cap index compared to the Nifty. Now the small cap index has multiple negative divergences with the Nifty because it completely has been underperforming. It's been, I can say, one of the worst indices as far as the broad or diversified indices are concerned, because even a Nifty 500, while weaker than the Nifty, has gone up a lot more. The mid cap has gone up a lot more, but the small cap index has lagged far behind. After these 2 previous highs, it should have moved much more, but it's not even been able to surpass this. I forget that it's not gotten back there. It's only a retracement, and now it's not even taking out that high. So a true lag, very similar to the lag we actually saw all the way back ahead of the pandemic. For those who don't remember, the price action was that the broad market indices were attempting to make a comeback and failing every time. There was a breakout here in Jan of 2020, which again failed pretty badly, so it couldn't really break out, and that's sort of giving a similar sense here that this breakout has actually failed or is appearing to fail so far because of the lack of participation of the broad market. So that's the thing to watch out for. Will the weakness in the mid and small cap indices basically, and not only mid and small cap, like I've said, across sector indices are lead indications of the market rolling over. In other words, you had the IT sector do exceedingly well till Jan. You had the metals and commodities do well till maybe April. You had the oil and gas, continue to do well, peaking here in April, or some may say by September, depending on which stocks within the sector you're really watching. The FMCG index has gone up a lot more, but we have now continuing divergences between, say, energy, which peaked over here again in April. You have divergences with even the all cap index. In fact, recently has not seen its September high being surpassed. The metal index peaking in April and rolling over pretty sharply. I think the IT has been the weakest of the lot in terms of rollover and loss. But are these topping processes, one sector at a time, meaning that, it's distributive rather than, a consolidation, and a trend up has already started in some of these. I think all these divergences need to break. If they do, it would be sign of a strong trend. But till that point of time, divergences are really signaling a weakness in the market internals. And you should continue to watch those, specifically in the mid and small caps. They may probably be signaling and giving us a lead indication that a larger move to the downside is still pending. Lastly, at the end of this session, I just want to leave you with a reminder that the India Charts mentorship program, some people are calling me up for details. They are all on the website. But of course, I would suggest that you simply call the number here, call up, Chavan and his team. If you even WhatsApp him a message for a call back, they will get in touch with you. The number is here, or you can email, but ideally WhatsApp for a quicker, immediate response, and they should get in touch with you. So you want to study the details, you can see it on the mentorship page on the website, or you can simply call him for more details on how to go about it. We are going to be starting by the 11th of December, and then after that it runs for a minimum of 3 months. Every Sunday, typically 3 hours end up getting taken. We try to say 2 hours, but I'm telling you, it has never ended in less than 3 hours. And so you have to be prepared for that, and it can be intense. A lot of learning to be done there, including videos, and even during the week, wherever people have queries, they have the option of posting and getting our feedback on their individual charts. And so it's very much interactive and communicative. If you're serious about not just market analysis in general, but overall understanding of how to approach markets with the application of classical technicals, combined with Elliott wave analysis, combined with trade setups and actual execution, how do you really buy and sell, then this is a full-blown program that will get you from start to end. That is the real purpose. We don't do 1 day, 2 day sessions. We only do this long dated thing only once a year. We are doing it right now because it requires my attention, and this is about how much we can do. So it's a once a year opportunity for people to jump in. So like I said, just simply pick up your phone, call this number 973982266, and or just WhatsApp it, and you'll get a feedback call or whatever else details you're really looking for from my team. Thank you.